everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are having a great day. We are up about 7 points in the S&P, 37 in the NASDAQ this morning. So let's take a look at what we may have in store for the day. If you're new to the channel, make sure that you click the subscribe button, hit the notification bell so you get the alerts and the updates. Yesterday, we talked about let me put this on the daily chart. We talked about the fact that we had higher swing highs, higher swing lows, a little bit of a pullback last week, but yesterday we were able to rally up out of that level, and we are now coming into what's a really important area because this is our last swing high on a weekly chart. If we can get above this swing high, that would be a very, very telling sign because we would have a higher high on a weekly chart, something that we have not seen happen. Another thing that we take a look at is where do we stand with the 8 and 20 moving average. We've on our weekly moving averages, we've closed above the 8-period exponential moving average, and we've now closed above the 20-period exponential moving average, which is also some pretty bullish signs. So some things that we pay attention to, and so hopefully you guys have been listening for a while. That we're I don't know that we've put in the full bottom, but I'm pretty bullish at the moment. So we're coming up right up against a 4-hour supply area, which would be this pivot high right here. Now, that's already been hit once and twice, and we're basing in front of it, which means I don't think that it's going to be a very strong level and something I'm overly concerned with, but I do, have to be aware of that. And so as we're sitting just below our Globex high, as we break out to the upside, be aware that we could see a little bit of a stall between 4170 and 4200. But I think grinding higher would be probably what I would most likely expect to see happen today. So on a bit of a pullback, especially on a smaller time frame, I think there's reason to feel good about this area here at 4155 for a potential small time frame reversal. Put that in purple because it's found on the 15-minute level, with a stop there just below 41.47. Now, if we break below there, you've actually got a pretty good demand area down here at this wick over wick zone, 41.30 from where we hit yesterday. Now, we do also have a really nice picture of old resistance acting as new support right there at 41.48. So could be a decent reversal point back in here with that old resistance acting as new support. Clear to see on the 1-hour chart, right at this line right here where we're just kind of bouncing above that area now. In the NASDAQ, similar picture. And by the way, there's a lot of these demand areas down here. Let me just clear some of these out, so I don't feel like we're coming back to those anytime soon. Remember, and this is, by the way, why we do breakouts. Notice all the reversal trades that I'm clearing out here because we're not coming back to those anytime soon. And so you have to be willing to take breakout trades if you want to participate in strong bullish markets, because without taking breakout trades, you're going to miss those movements back to the upside. When I look at the NASDAQ, I actually get this picture here as a decent entry. 13,216 by 13,183, and that would be a little bit of a bear trap if price comes back into here and you get a long off of that level. The Russell 2000, we did break out to the upside. It's continuing to move up higher. I think that this 1900 is a good line of support to anticipate a bit of a bounce in the Russell as well. So all of our markets looking a bit bullish this morning. If I slide over and look at energies and metals with crude oil, we have finally broken below that 93. That was our support line. Unfortunately, we didn't get any true basing to get us in on that breakdown yesterday. And then we didn't retest the level to get us in. And so now I would use this wick over wick area on the hourly chart, which is also right at our breakout point, right? So we have a wick over wick level right at our hourly chart, which is also a key part of our breakdown. Or you just take a short below the low. I think either one of those are okay for an entry when I'm looking at crude oil. We did come close to our entry yesterday morning without getting in. Unfortunately, that level is a pretty good level, but we came close, but no proverbial cigar. And so now it's a breakdown below 90 or a retest up into this region right through here. Gold continuing its bullish momentum as we are continuing to move higher in the gold markets overall. Looking at, we put in a little bit of a basing bottoming here and was unable to create a lower swing low. And so continuing to move higher, that's what that line was to see if we would put in a lower low. We did not. We're continuing to move a bit higher. So upon a thrust through that 1805 area, I then think that this line right here becomes an excellent spot for a potential bullish reversal. One of them we looked at yesterday was the euro market, and we said, while we're chopping sideways, don't do anything. Same rules apply. There's really nothing to do inside of this area. Lots of upper and lower wicks in here, which tells me that that's a pretty dangerous area for me to try to force a trade. Actually getting a pretty strong bearish candle as we speak. And we'll see what that, if anything amounts to of that. But really, there's just not a whole lot to do inside of that particular market. Bonds, looking at our 10-year note. On our 10-year note, we poked below this breakout line, but certainly gave us no basing, which is why this is not considered a false breakout, right? We poked below, rallied back up, but that's not a false breakout because there's no basing before the level. I do have a good reversal here and a good reversal in here. But when I go to the smaller time frames, I would look to this area right there for a pretty clean reversal if we do break up into that region. So those are my thoughts for the day. If you have any questions, as always, shoot us an email, support@tradersarmy.com. Until tomorrow, everybody, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.